Hello traders, this is Rich from TradeSight. This is our market preview for the coming session. This is going to be for Wednesday, July 31st, 2013, last day of the month. We'll discuss the special implications of that a little bit later, but let's kind of just review what we had today. We had the ES flat again on the day here. The NASDAQ E-mini futures were up 20 handles on the day. The strength in the market was definitely concentrated on the NASDAQ side. That definitely outperformed all the other majors. Bonds basically flat on the day, just kind of banging along the bottom of the trading range. The market internals were not particularly good. The advanced declines were barely positive on New York and not very impressive on the NASDAQ side after the NASDAQ was up 20 handles on the day. The intraday trend closed at 1.13, and we'll take a look at the implications of that and the other internal measurements in just a bit. But first, let's turn our attention to the ES futures. Here's a look at the ES futures. Really not much to report here. Still kind of just hovering around this 8/8 level, 1687.50. Still holding above the 10 EMA on a closing basis for sure. So the chart remains short-term positive and potentially charging up here for a push up to this 2/8 level at 1718 3/4. NASDAQ side was notably stronger. Made a new high close on the move, which is definitely important. Also expanded the range to the upside, but in so doing is now 10 days up in the Seeker exhaustion countdown. So we're definitely getting close to what could be a reversal warning from the TradeSight Seeker. Levels to watch: 8/8 at 31.25. The 10 EMA to the downside, and then 30.46 at that 6/8 level, which is the heart of this little consolidation area. The bonds on the day again were very, very flat, essentially just mimicking what they did yesterday. No real change on the day, still below the 10 EMA, but above the risk level. Right, we haven't looked at the S&P TLT cross in a while, so let's take a look at that. We're right in the heart of the trading range that we've really essentially been in since the pivot from last November. This is a sustainable place that we can be in, but we've leveled off here. If we're going to see continued upward pressure to continue to climb here, we're either going to have to see the bonds go down or see the S&P start a little bit higher. Right now we're just kind of moving laterally here and not really within shooting range of the upper or lower boundary. All right, the other thing we haven't looked at in a little while is the Dow Gold ratio. Dow Gold ratio is starting to retreat. It's basically just back to the midpoint of this regression channel, which is not any cause for concern. What we want to make sure is that we can see some positive construction remain, hold this regression channel to the upside here, and hopefully keep a positive bias for the market. If this breaks to the downside and we lose this regression channel, that'll be an indication that risk is no longer being put on, and rather shelter is being sought out by investors. But for now, we're okay. Need to keep an eye on this. This is the daily time frame, and it can move pretty quickly if we get some decent moves in the prices of gold. All right, now as far as the multi-sector daily chart, we had a little decent performance out of the stocks today. You can see the blue line here; it's curling up. The BTK was fairly positive. The banks, however, really starting to feel the weight. We're going to need some of these other major sectors like the energies, transportations, all these later cycle stocks to start to kick in here to hold the broad market up and potentially power us to new highs. XAU is still kind of bumping along here. Hasn't really shown us much. Today was lower on the day after attempting to fill the gap and move higher, but still a source of funds and under the radar, which can always be very interesting. Here's a look at the total put-call ratio. This is starting to move a little bit more towards our 0.5 reversal threshold. This is definitely the lowest reading that we've seen since May. This is something that we want to keep an eye on. Look for that one-day spike where we get to 0.5 and get that reversal warning. Haven't had it yet, but we're definitely going to be on top of this going forward. And if we do push up and start to record those Seeker exhaustion warnings, if we get that is also coincident with the put-call ratio and perhaps even the 10-day trend, that's going to be very, very notable and a very powerful alignment of signals. Here's a look at the individual sectors ranked from best to worst. The BTK was Top Gun, followed very, very closely by the SOX. Computer hardware was up in the top, so definitely a little bit of a risk-on appetite here today. The equities, the commodity-related equities were weak. Airlines were weak. The XOI, which is oil and gas, was fairly weak, and the gold and silver index was weak. Most of the commodities were fairly weak today, with definitely a bent towards your classic growth-oriented shares today. Right, so here's a look at the BTK, which is top dog on the day. It's still basically in this little lateral trading range, but perhaps trying to pivot here. One little notable feature here: we did post the one count of the Seeker setup phase, so we have pivoted to the upside here, and there's a little something for the market to build on. SOX index is still below the 10 EMA. It did pivot above the close 4 days ago, which did record that one reading. A break above the 10 EMA would definitely be most welcome, and then we can perhaps push up into this 8-ace level at 500. But one day does not make a trend, and we're still short-term negative, being below the 10 EMA, just barely recouping the 50. Let's look at the XAU. The XAU is still holding above the 10 EMA in the area of this 4-ace level at 100. So I wouldn't rule out pivoting higher here, but of course, since we're in this lateral trading range, we need to respect whatever way it breaks out of this range, and then really go with that. The BKX on the day was not particularly powerful. Still below the 10 EMA on a closing basis. Key support's going to be the static trend line here off this 1 through 9 Seeker setup phase. And that's coming about $63, $64. Now here's an interesting chart. Here's the OSX. We essentially kind of just traded inside of yesterday's range. We used the 50 DMA for support again, but we closed below the midpoint, or basically at the midpoint of yesterday's range. If we take out this 2-day low, I would definitely be interested in a short trade in the OSX. So definitely keep an eye on this. You can trade any of the rig, Halliburton, Schlumberger, or you can use one of the ETFs to profit from this. Definitely keep an eye on this. MACD is in a negative position and definitely could move very quickly down to the zero line before finding any kind of support. So here's a look at the oil contracts. Oil contracts made a new low on the move. You can see that we have definitely starting to get a little bit of space below the 10 EMA. There's not really any support until we get down to this 100 level. The MACD is in a negative position now and starting to develop a little bit of downside momentum. The other key thing to keep in consideration here is that we're only 5 bars down in the Seeker setup, so we've got plenty of days here to play with before we get to 9 bars down, where we would expect to find first support. All right, folks. Well, keep in mind that tomorrow is the last day of the trading month. We tend to see the window dressing the prior day, and since we saw a little bit of upside today, tomorrow could be a little bit of a sloppier day. But we'll have to see if there's any news to drive it either way. But I tend to size down on the last day of the month because there tend to be all those little micro agendas that are short-lived in the market. You know, buy me 50,000, 100,000 of this, that, the other thing, short an equal amount of this, that, the other thing, whatever I'm short. So the window dressing is real. It usually tends to run its course Thursday, the day before the last day of the month, and then the morning of the last day of the month, because traders don't generally like to have their name all over tickets that are being executed right on the close on the last day of the month. So just keep that in mind for tomorrow. And as always, this has been Rich for TradeSight, and thanks for listening.